Welcome to my daily review. You are looking at a daily chart of the Nasdaq. Today is Thursday, June 27. And as we came into this week, I was a little bit cautious. Oh, by the way, the Nasdaq was up 53 points or 0.30%, closed at 17,858. And if I zoom in here, maybe we can get a little reading on the 10 EMA is 1.1% above the 10, 2.5% above the 21, and 6.9% above the 50. The reason why I was cautious coming into this week was this Thursday candle where the Nasdaq made a new high. This is June 20th, last Thursday, made a new high of 17,936 and then reversed lower. And a lot of stocks did the same thing, like Nvidia and just a lot of stocks made a new high and then reversed lower and have not found the strength to make new highs. But it sold off, closed near the lows, followed through on Friday, which was the OPEX Friday with the big volume. And then on Monday, it came through and had this inverted hammer candle as it was down more than 1% on Monday. So, below the 10, 3-day pullback. What you want to see is when it makes a high and reverses lower like that, you want to see it, regain that loss right away. And it hasn't done that. Yeah, it's had three, decent days here, 1.26%, 0.5%, and today's 0.3%. But you want to see it get back above this 17,936. It could do it tomorrow, sure, with the tame PCE inflation data reading. The Nasdaq could certainly rip and make new highs. But what I like to see is it come down to a moving average and bounce sharply back above the old high. Hasn't done it yet. Not saying it won't, though, because it's been trading really steady. If you just look at the week on the Nasdaq, it's been a pretty good week, just kind of trading, sideways. It's up nearly 1%, 169 points. Not doing anything wrong. You got that hammer candle there. It's near the high of the week. So we'll see what happens tomorrow. And if you just look at the weekly bars, you can see these big, volume bars here on the Nasdaq weekly. So it's in a power trend. It looks fine. It's just I would like to see it get back above that reversal bar from last Thursday. Anyway, more will be revealed tomorrow. I do want to take a look at the Russell. This was up 1% today, so a good day for the Russell. Back above the moving averages here, barely. They all three of those moving averages are pretty tight, 0.5, 0.2, 0.1. Okay, maybe Russell will make a move here. We'll have to wait and see. I think if rates start to come in, the Russell will have a good rest of the year, but we're gonna have to wait and see. Anyway, I'm not interested in the indexes that much, although you do need them. You need the tailwinds of the market to be successful in your stock picking. But what's driving the indexes are these mega cap tech stocks, which are being bought. I think primarily, window dressing. Fund managers need these in their books, and you can see Apple here, very technically trading, broke out, pulled back to the 10, found support. Now it's been up 4 days in a row. So Apple looks very strong, looking to take out that old 2020. Microsoft is another one. Fund managers have to own this, and it made a new high today, right? Yep, what was it? Before it pulled back, it made a new high, 456.17. So Microsoft, once again, being bought, kind of window dressing. We'll see if this trade reverses next week or if it accelerates. I'm very interested in seeing that. Meta Platforms is one that we've had on our radio list this week. Finally starting to pull away from that 500 level. Hopefully this time it's real. You could see the cup shape pattern handle, the 514, the buy point there. And you can see how long this has been innovation of that. It's got a lot of selling here on that heavy selling on the earnings report, which makes the the accumulation distribution rating a D minus. But obviously, somebody is buying that stock as it's gone from 414 to 519. It's a $105 move. And we knew at the time, well, we said at the time that it was a gift. I thought it was a gift, and it certainly turned out to be. But this is setting up in a base, and certainly earnings on the 24th, this thing could be much higher in a month or so. Just gonna have to wait and see. Amazon is another one we've had on our ready list. This one's extended though. I wouldn't be chasing this up here. I think it'll have trouble with 200 anyway. It made it up to $199.84 today. You know, it was up 2.19%, but I think it'll have trouble with 200. And right now it's 4.7% above the 10, which is pretty rich for Amazon. That normally trades pretty tight to the moving averages, but it's been a powerful mover. And there was news this morning that well, they've had a lot of news recently, but one particular earnings report, which I'll get to later, that shows that Amazon's kind of taken share in certain areas. Google, another one we've had on our list. It's getting a little away from the buy point though of 178.77, just trading higher. Like I said, I want to see what happens to these stocks next week. I'd imagine, with they would continue on and being bought, but you never know. This window dressing, they buy them this week and sell them next week. I kind of doubt it. Okay, Apple, Microsoft, Meta, Amazon, Google. Oh yeah, Tesla. Tesla looks pretty good. Broke above the downtrend line. I know it's still trading below the the 200, but the shorter term moving averages are turning up. It was up a buck today. Not bad. Yeah, the shorter term moving averages are all turning up now. RS line turning up as well. So Tesla looking much, much better. Looks like it's carving out a bottom here. And then Nvidia, they split 10 for 1, and this is what I kind of expected. I didn't expect them to split 10 for 1 and keep ripping higher. There's a lot more surplus available, a lot more stock, 10 times more actually, with the 10 for 1 stock split. Now it's starting to just settle in here. Yeah, pull back to the 21 found support, but just kind of a quiet inside day today. I'm not going to call it dead money, but I'm just going to say this thing probably needs to rest for a little while after such a big run, kind of like what it did here. Made a big run, then it just kind of rested here for a little bit, made another big run. But they have earnings on August 15th, and that'll be a catalyst one way or the other. All right, so that's my Mag 7 for today. Yeah, I didn't say Nvidia was dead money. I just said it probably needs to consolidate for a little bit. I don't want to be that guy making these predictions. And forming a base is fine. There's nothing wrong with that. Micron reported last night. Very good report. Beat. I saw these. Some people don't know what they're doing. These journalists were saying that they missed on earnings and that's why it's down. They didn't miss on earnings. They reported a stellar earnings report, triple digit, earnings growth, 82%. We're seeing accelerating sales growth. Their margins kicked up. They're selling pretty much everything they make in the high bandwidth memory space. So it was just, technically it's time to take profits. It's run a lot. It's been up more than 100% in the last year. Let me take a look at this. Yeah, 98% in the last year. So, people are going to take profits and move to someplace else. The thing about Micron that caught me today was, first of all, it pulled back near the old buy point, which to me, that's an area of interest. If you wanted to buy this, maybe it'll just putz around here, that 130 level for a little bit before rallying back through. We're gonna have to wait and see, but I think that's a legitimate buy point there if you want to get it at 130.54. We've seen a lot of stocks break out of a base, run up, and then return to their buy points. But to me, this is just profit taking. Quite a few of the institutions upgraded the stock today. They upgraded their prices, 160, 170, 180. So there's nothing wrong with the report. There's nothing wrong with the business. It's definitely cyclical, and it's definitely doing much better. There you can see their earnings line just heading due north on Micron. But typically when the big kahuna, this is 150, it was 150 something billion, a market cap stock before it lost 7% today. Usually when the big kahuna sells off like this, you're going to see the others sell off, and they didn't, which kind of tells me that's just profit taking, and institutions really like this space. I mean, it's the #1 group right now. And I think Micron's demise here, the sell-off, will be kind of short-lived here, and they're going to get back into that one as well. Pure Storage was up nearly 4%, on the the earnings miss from Micron. So that one's looking good. It rallied back through its moving averages after, selling off with the Nasdaq, Thursday, Friday, Monday. That one looks good. WDC, Western Digital. Another one that, to me, it's come back to this buy point area here, and I really should put it on the ready list for tomorrow. First of all, I like the space, and there's not many of them that are set up in bases here. A lot of them are extended and just pulling back to moving averages. This is Seagate, pull back to the 10, broke out from that double bottom base, now pulled back to its 10, finding support. I showed you Western Digital, NTAP. This is, I believe, the strongest one of these. Just surfing like Kelly Slater on the 10. This one's hanging 10 on its moving averages and looking fantastic. SIMO is another one in this group. Now this one is, it's an ADR, so it's going to trade a little differently than the other ones that I just showed you, but earnings line going up, so that the industry has had a rebound. It's having it's had suffered through the bad times, and now it's enjoying the good times. This one has a buy point there at 83.96, so a little bit below it, just a tick below it, down a couple percent on the week, but yeah, it needs to get back above the 21 there. Anyway, that's enough for Simo and NTAP. I've got to get to some of these other stocks here. So if Micron was down and had such a terrible report, then why is Super Micro up 7%? Because it wasn't a bad report. It was a very good report. And the AI data center trade, computer hardware trade is very much alive. This is Dell and Supermicro are the stalwarts in this group, and it's the number 6 ranked group. So Supermicro still looks good, still forming a base. I still like Supermicro. Dell is another one. I mentioned Dell, so I might as well show it. Pull back after earnings, ran up, and then Thursday, this is what I'm talking about. When Thursday you see this reversal bar, then sell off the next few days. That's warrants caution, I believe. And then CAMT, this one is fantastic. Love this stock. Trading technically very, very sound. Broke out of its base, ran up, and then it pulled back to the 21. Did it slice through its 21? No, it didn't. And I think these pullbacks to the 21 only on the bounce are they buys, right? Run up, pull back. Those 3 days when the Nasdaq pulled back, boom, Nasdaq's up 3 days. This one makes a new high today, up nearly 5%. CAMT, I know people want it to be a little more liquid. It only trades 500,000 shares a day, but $123 stock. I mean, to me, it fits the criteria for a it's not an illiquid stock. It's liquid enough. All right, let's move on. I've got to get to my I don't know, drug stocks, I guess you'd call them. This is this is the pet trade. LANCO Animal Health got hit by Dr. No again today. I shouldn't say she, the FDA put a label. They got 2 drugs approved. One is for dermatitis, and the other one was for fleas in dogs, and they both got approved, but one had a label on it, and it's really going to hinder the sales and launch of this new drug for dermatitis in dogs. So that's why this sold off 20% today. I don't think it's really warranted, but that's what happens on Wall Street. They sell first and ask questions later. So LANCO, yeah, it's a tough day. 20% haircut. CHWY is another one. Since I'm in the dog space, they didn't have any FDA action today. That is kind of a strange candle, though, isn't it? I was looking at it earlier, and some guy was saying, yeah, that it's doing really well. Yeah, well, I don't know. Is that the daily range, 39 to 27? Ooh, close at 29.5. But it has been doing well, trying to emerge and break out of this, stage 1 base here with the 24.17 buy point. So CHWY still looks okay. That bar is pretty wicked, though. And HIMS got hit with a HIMS to me, I'm going to stay away from this one. It got hit with the short seller that I've never heard of, Hunter Brook or something like that. But once again, when you're put out a short report, all you have to do is create fear and doubt and uncertainty. And they'll sell first and ask questions later. So the short report here said that they're doing the compounding GLP-1 drugs, which Eli Lilly and Novo Nordisk have a ton of lawsuits out in these companies that are doing this. So it's self-administered, you you give yourself a shot at home, which to me, I can't stand needles. I would never do that. I wouldn't take drugs anyway, but I just can't stand the sight of needles. It's like my wife when she sees a spider, she's gonna burn down the house to get the spider. I just cannot take needles. Anyway, all my friends who are on this Ozempic or Mounjaro or Zepbound, they go to the doctor. The doctor monitors their weight. They monitor how much you're getting injected. They up the dosage as you do better and tolerate it better. They give you vitamin B12 shots, because it is a little depleting on the system. So that's the way to do it. Don't to me. I mean, if I was gonna do it at all, which I wouldn't, do it with a doctor. Have some guidance here, and I think these hymns are selling it cheaper, so people do it, the cheaper version and do it at home. But so anyway, that's what the short report was about today. Anyway, I'm gonna move on from all that and go to where the money was flowing to today. The software names, a lot of them were beaten down software names, and they're making a comeback. This is one of our power earnings gap stock, ZETA, Zeta Global, ran up. It broke out on May 7th, 18% ran up, made a new high, and just pulled back to the 50 for the first time since the breakout and just ripped higher, up 5.5% today. That one looks good. KD broke out, pulled back, kind of hugged its 21, had this little shelf type pattern. And maybe it's going to pull out of it now. Maybe it's going to break out of this little box here. So yeah, that little shelf pattern, if it wants to move higher, I'm all for it. Monday. Jimmy Buffett wrote a song about Monday. I don't think the folks in LA were too happy about it, but a good song. And this stock is, you can see that it's another one of these earnings gaps. If I can get the track price here, I don't know how much it went up. 21%, thank you very much. Made a new high, then pulled back and kind of squatted around the 21. One day pulled back to the 50. Now it's just, that's a shakeout, but moving higher. Yeah, I'd like this thing, if, they're going to keep buying it. It's going to keep going higher. I'd like to see it above the, real true breakout would be above this 249 area, because it's still in this, what is known as a Darvis box, right? It's got to break out of that. All right. Looks good though. Datadog, another beaten down software name. Their earnings report, it's still pretty good. 25, 26, 27% sales growth. Earnings fantastic, near triple digit. Sold off, and now it's starting to, it was under the 200 there, and now it's rallied through all of its moving averages. And you can see the short-term moving average, the green and the magenta, now trading through the 50. That looks very good to me. The RS line ripping through the moving averages there. Yeah, I would say that's a buy there, 125.44. We'll see what happens with Datadog tomorrow and next week. Looks good to me though. Snowflake, this one has been torched. This looks like the 2022 bear market, 237 down to what? How far did this go? How low can you go? I know it's below 120. Yeah, 122. Wow. Yeah, there you go. So anyway, trying to create this stage one base here and trying to find a bottom somehow. But it's just a rotation. They sell some stocks and buy some of these unloved names, and Snowflake is getting some of the benefits from that. And let's go to the cool blue. Let's go to the cryptocurrency, the cybersecurity stocks, and this is Zscaler. Definitely trying to carve out a bottom and trade through stage one base here. Like to see it get above that 193.27 level and above the 200, which is at 192.43. Okay, going up 12 cents a day. Okay. Zscaler, you got to do it, man. Palo Alto Networks did break out today. Did I buy it? No, I didn't. CrowdStrike's the one that I like in this group. But anyway, above that 324, had this nice little, I guess you could call that like a little Darvis box here. And it broke out above there. Closed at 340.82. So that's quite a nice jump today for Palo Alto Networks. So keep your eye on this one, folks. This is a cash cow. There's nothing wrong with they changed their accounting and the CEOs got hammered for it, but they're cash cows. They got return on equity up the wazoo. No debt. This is a fantastic company, well run. And technically now it looks a heck of a lot better. CrowdStrike, this is a leader of the group. Had this cup with handle pattern, broke out. Now it's just forming this little shelf pattern. I did have it on our ready list a couple times. It was on for a while. I think it was on longer than ELF has been. But I like it above this high right here. 394.64, it's just right there. And if you look at the weekly charts, weed out the noise. It looks like it's in a, which would be considered like a 3 weeks tight pattern. There you see the cup with handle pattern, the breakout now. Just trading sideways, which is telling you that institutions are, comfortable holding it here. They're not selling it, but they haven't come back to buy more. So when they do, it should rip right through 400, and they will. They love growth, and this is the growthiest of these names here. Consistent growth, earnings and sales. Fantastic company, very well run. Okay, let's get to a couple other more traditional software names. Now, this is one of the larger ones, 158 billion market cap, just consolidating in a base. It did undercut its 200, traded down to 638, and now ripping through all of its moving averages. Straight up from the bottom, that looks pretty good. And then CRM, Benioff's company, I think their earnings report was not good. They got the big haircut, and now it's battling back. So that looks pretty good. ESTC, this is one that I like, AI component. Sold off, and then with earnings, I believe it was right here. And now it's kind of battled back, still, near, I would say, that 111 area, or even above the 116. If it could get above that, that would be an area of interest for me. All right, that's it for the software and cybersecurity names. I got to get to retail. Retail's my fave. Elf, like I said, I've had this on the ready list for a while. I think it was back in the 170s a couple weeks ago. And I think I upped it to like 190 or something last week. And now it really does have a standard buy point here at $202.58. You can see it's a stage 3 base. All it's been doing is coming down to a moving average of finding support and bouncing, come down to moving average bounce, come down to moving average bounce. And now it's come down to this 10, and now it bounced, and I wouldn't be buying it here. It's too far extended from, that 202, and it's also, 10% above the 21. So I need something a little closer to the 21, but it wouldn't surprise me with this stock. It wouldn't surprise me if it just, blasted right above the 221.83 from, what reversed lower on March 4th, which is prior to that March 8th date. Anyway, a couple other retail names of interest. Deckers is flirting with the 1,000 level here. This looks like a bull wedge pattern to me. It gapped higher. This is another one of our gapper stocks that we're monitoring. Gapped higher, now formed this little bull wedge pattern, trading sideways. I would not be surprised to see this one move. It's down after hours. I'll get to that in a minute, but there really shouldn't be because they're taking market share. This one too, same thing. ON, taking market share, but down after hours. I'll get to that in a minute. And okay, CMG, Chipotle, they have a 50-for-1 stock split. And this is what I expected Nvidia to do because of the supply. These guys went from 27 million shares in the float to 1.3 billion. And so that's just a lot of supply to absorb for the market. So, you kind of got to expect some selling here. Still, though, 65.20 is an area of interest. I'd like to see it, not trade below the 50 for too long, but there's an awful lot of supply in the flying burrito stock. All right, Levi reported this morning, and apparel's tough. It's just a tough business. Consumers are, fickle, and they'll glom onto, a certain item, especially in the apparel space. Lululemon's feeling it too. And they just go to other brands, and they like other brands, and so the bigger the fish, the more they have to fall here. This is Levi's. It was consolidating in a stage one base, broke out, and now it's really fallen on hard times. The earnings line's still doing okay, but that stock, it's got a 15% haircut this week. That's not fun. So sorry for the longs there. Sliced its 50 with volume. It's adios, muchachos. And the one that I really like and is taking market share, consumers are changing their habits, they're changing their styles, they're changing the way they dine, they're changing the way they shop. And Bros, I think, is one of these companies that has a real advantage and a real possibility of taking market share from Starbucks and doing well for a long, long, long time. Here you can see it's still, to me, this is an IPO base going through its due diligence phase, and now it's reaching its advanced phase. And you can see institutions are buying this stock up another 7-something% this week. This replaced Nvidia as one of my larger holdings because I had to reduce Nvidia because I don't think it's going to go anywhere where this one is. So Nvidia is not my top 5 any longer, but Bros is. Yeah, I like retail. So what can I say? Wing is another one that benefiting, it's a real strong stock. I don't know how much it's up this week, 2.76%, so outperforming the index. And yeah, I mean, you just got to notice these changes in the consumer, their preferences. All right, crypto. I've been hard on crypto lately, and crypto is just, it's stuck, but Bitcoin's stuck about 61,000. Coinbase below its 50 here, just pointing it out. I don't think it'll be down there for long. I do believe these things are going to start to heal a little bit. This is a MicroStrategy traded below the 50 and now has bounced. You could see the cup with handle pattern there at the 1740 buy point. And then Hood is another one that I like in this group. Yeah, this one's stronger above all its moving averages. And then Irene is a volatile one. This one just pulled back to its 21 today. Didn't really bounce, but I'm still watching it because it's a volatile name. You can see when stocks move like that, you got to pay attention to them. Yeah, it was closed at 33% of its daily range, so not a real strong bounce there for Iris Energy. That's it for me. Thank you for watching. Tomorrow we got the inflation data. If it's pretty tame, I think the market's going to rip, and I think it will be, but just take it one day at a time. If it comes in hot, the market will probably stall a little bit. Anyway, I lied. I have one more thing. I'm not leaving. I have to point out something here. Some people have the idea that you can just buy a stock and hold it forever and it's going to be great. This is a blue chip stock back in the day, Dow Jones Industrial Average stock, and it's fallen on hard times. I mean, obviously, hello, it's gone from what, 97 down to $12. So, Apple put Polaroid and Kodak pretty much out of business, and BlackBerry too. They put a lot of companies out of business, Palm. But so, like I said, consumers change, right? If you've ever been to a Walgreens recently, you could probably understand why this stock isn't doing well, because it's not a real friendly environment. They got their valuables locked up. And it's just, Amazon is taking market share from them. It's so much easier if you want to buy, if you want to buy lotion or whatever you're going to buy, or whatever from the drugstore, you could just buy it from Amazon, have it at your doorstep that night or tomorrow morning, whatever. You don't have to go to the locked up prison that is Walgreens. So I would stay away from Walgreens, and I would also stay away from CVS because they're getting their lunches handed to them by Amazon. And that's why Amazon is in the Dow now and Walgreens is not. All right, that's not what I wanted to talk about though, because there are stocks that you can hold for a long time, like a Costco and an Apple. It's been great for 25 years. Nike reported tonight and another abysmal quarter. And so they're definitely losing market share to Deckers and On Holdings. the CFO said on the call, it talked about a challenging environment for 2025. Whenever a CEO or CFO says in a conference call, a challenging environment, that's code word for we're not going to do very well for a while. So you got to stay away from that stock. This is the big kahuna in the retail apparel shoes. It's 142 billion market cap, so it is going to be a drag on those stocks, at least at the open tomorrow. Cooler heads will probably prevail, and they'll start buying Deckers and On Holdings. But this is a company that's relying on Michael Jordan, who hasn't played basketball in 25 years. Tiger Woods has left, and he's with TaylorMade now, and they just do not have any innovation or anything appealing. And so they're kind of relying on old products, and it's just not working for them. And so, yeah, you got to stay away from stock. Like I said, in the market, there's winners and there's losers. And I think it's pretty clear, if you look at this on the weekly, lower left to upper right, hello. I mean, it doesn't take Einstein to figure this out. They're taking market share from Nike in the athletic and casual wear group. Anyway, that's it for me. I'll be back tomorrow morning. I am seeing some more stocks setting up, even though, yeah, I mean, I'm seeing more stocks setting up. Okay. That's it for me. Thank you for watching. We never give up.